It's Black Monday, isn't it? Welcome to the Best of U.S. Investors, two regular guys show. I've got Mark over here,
By the dumpster
somewhere
fire.
over there by his dumpster fire, and me, Trent Grinkmeyer, over here. Today we're just going to do a quick video on charts. It's never actually quick with he and I because we just go on and on. But we're going to talk about some charts, what's happening in the marketplace, and each of us give our 2 cents of what's happening and possibly what to expect in the near future. So let's get rolling.
All right. Got my dumpster fire going because it's dumpster fire Monday, followed
Yes, it
up
is.
from dumpster fire Friday.
Yeah.
It's interesting, and I said a couple weeks ago, I said if the Mag 7 don't hit earnings and expectations out of the ballpark, then we're going to start seeing some degradation. And we did when the first two, Tesla and Google, uh, didn't really do as well as everyone thought, didn't hit out of the ballpark for sure. And then we saw some rotation into the small caps for about 2 weeks, and it was pretty good. We did really well. And then you came up with the final, three out of the three or four out of the mega caps. And, I think Meta was the only one that really did anything that was halfway decent. And then we had the Fed come out, and it was really strange because Jerome Powell said, this we're not going to lower rates, but economy's looking better and the employment's looking better, and we're waiting, and probably in September, if everything looks good and we get closer to our 2%, we're going to do fine, and we might be able to lower rates. And then the market exploded on Wednesday after that.
Yeah.
And then we came in with some more earnings reports from the mega caps on Thursday. That didn't do so well. And of course, Friday we came in with the unemployment report going from, to 4.3%. I don't mean to laugh, but it's ridiculous because we just had 2 days prior the Fed tell us everything is fine, unemployment's doing fine. And obviously, they either are incompetent because they don't know what's going on, or they're intentionally trying to do something because it's almost laughable. And now we've got, then we have the weekend. And I always say, I get out of swing trades before the weekend because you never know what's going to happen. And two major things happen. Okay, the first was Nvidia, and I'm going to let you talk about that a little more. You follow it. And the second was Berkshire Hathaway came out with their shareholder, or their shareholder Q quarterly earnings, and to show that they dumped not only Bank of America but half of their Apple stock, and now he's
Yeah.
got over 300 billion in cash. Why would he do that? Okay, how does he know? And also, what happened to Nvidia, and I'll let you explain that a little bit.
Sure. So NVIDIA has I believe it's called the Blackwell chip. It's this mega fast GPU chip that they announced, I believe, back in early May, and about how the design of it's pretty incredible, this, that, and the other. Well, they send it off to Taiwan Semiconductor for them to start manufacturing it. And understand you have Meta, who spent 10 billion on this chip. I believe Amazon is similar numbers, Google as well. And you've got all of these orders because everybody's hyped about this, and because NVIDIA is really good at really hyping recently, and the excitement around Jensen Huang and his partnerships and this, that, and the other. Well, Taiwan Semiconductor finds a flaw in it and lets NVIDIA know, and NVIDIA has to let their customers know that they will not be getting it for another 3 months. They are having to fix this problem. This is two big issues. One, this will affect part of their revenue stream that they were probably anticipating receiving income on in this third quarter. But also, if it's 3 months, that puts you into fourth quarter of this year. And potential risk there is you have a reduction in the amount people want to order, because as we go further into this second half of the year, we may see some red flags in the economy, which I think we're already seeing that. But also, they won't see that revenue probably until they ship, which probably will end up being the first of the year, which also means, since we're just such a narrative driven market, that chances are you're going to see earning guidance be more conservative than what we're used to from Nvidia, which then causes selling. Well, Nvidia is down a ton today, and chances are we're going to continue to see that as it pulls these other semiconductor chips along with it as well. That's part of this problem. And we've hung our hat on a handful of big companies who have had stellar returns. And if you have capitalized on them and locked those gains in, good for you. Unfortunately, a lot of people don't. So anyway, that's what happened over the weekend with Nvidia. But I think this sell-off we're seeing is way bigger than just Nvidia and Berkshire.
You know what's interesting about that Nvidia and with Warren Buffett selling off Apple and then all this happening is we talked about it a couple of weeks ago how the CEO of Nvidia and all his executives have been selling Nvidia stock and no one buying it.
Yeah,
Okay. And you don't think that they didn't have a little bit of an inkling that, oh, there might be a production problem or a flaw down the road? Come on. I've worked in
yeah,
manufacturing. You know it's coming. It's coming. So
yeah,
that would just be, I don't know for sure, but it just seems too much of a coinky dink for
yeah.
me between Buffett and what we're seeing in NVIDIA and what they did to sell. And then you go back, you see JP Morgan, look at the JP Morgan stock, all of this stuff. You don't think they know, then maybe they don't. I don't
Yeah,
know, but it looks suspicious to me.
I think that's why it's really important not just to look at the fundamentals, not just to look at charts, but also look at the outside elements like insider trading, like all the executives at NVIDIA who have been selling stock. Look at these other one big element, which we'll get into here in a little bit, but is the currency market and how it's utilized and has been utilized over the years. So I think you got to sort of broaden your view out every so often and look under the rug and say what kind of monsters are underneath there.
Well, and that's why I think, when we do our platinum channel, open channel for all our members every Friday, we go through for the first half hour of, all the reports that came through and what they mean so that,
Hmm.
and then what the Fed says, and we can kind of look at each way and go, well, why did they say that when this is what the report is? Just to kind of give everyone a one up on, okay, well, maybe I shouldn't look at headlines only and dig into these reports a little bit.
Yeah, exactly.
So, so today is Monday, and we're down over 1,100 points in the Dow, 650
Jeez.
points in Nasdaq, 134 points in the S&P. This is after a big close last Friday. So today, of course, all the talking heads are out there. I was watching CNBC, and this could be a time. This could be a time to buy, and this could be this and that. Well, I think you need to look at charts and see exactly what the time to buy is. And then the other thing is now they're all screaming at Powell. He needs to go lower rates. And not only does he need to lower by a quarter point, I saw, Jeremy Siegel said 75 basis points. And then there was another guy, I forget, it was on Fox or CNBC. He wants $1, 150, $1.50 down. And so because that's going to save the economy. And I'm looking at that going, well, number one, we talked a little bit about it. They have a dual mandate at the Fed, and none of it's keeping the stock market propped up. It's keeping inflation in check and full
Hmm.
employment. And there's nothing that says anything about the stock market. But all of a sudden, we want the Fed to drop rates so the stock market goes back up, which caused this thing in the first place for 12 years having zero interest rates. Okay, so I believe we need to let the market clear itself out, and get back on us, get back to the assets at the level and value that they really are, because
Hmm.
we're inflated in these assets, and that's what we're seeing today. The more
Yeah,
the Fed gets involved, the more the assets get inflated, the bigger this thing's going to be, in my opinion.
I agree.
And what if the Fed does, Trent? What if the Fed does all of a sudden they have an emergency meeting tomorrow and they drop it by, 150 basis points? What's that going to tell the market? Initially, I think it would go up because like, oh yeah, and then they're like, hey, what's wrong? Why? How come they did it? Why did they have to do it? I thought the economy was great. Down, and that's what we saw in those Fed charts.
Oh yeah, exactly. And the thing is, like what you said, it will jump higher because it's the narrative. It's the algorithmic trade. Look for the major news headline, trade that headline, and then go against it. After you've profited from it. And I think that's the risky part of all this is there you have that element that could whipsaw this market higher, but also in something I just, I semi understand, but it's this whole leverage element. You and I have talked about this for quite a while about how we have seen more borrowed money since the great financial crisis that has been used to grow assets. If it's to buy real estate, if it's to buy stock market, if it's for institutions and hedge funds. But there's this one other thing that people really don't know anything about. And honestly, it's a very, very complex subject, but it's what they call the carry trade, and it's the US to Japanese yen carry trade. Now, since 2007, the yen, or Japan's central policy, is basically keep everything at zero rates. That has been their policy. And they've been in a rut for what, over 30 years now as an economy. Well, this past month, they raised rates for the first time since 2007. Okay, since 2007, 25 basis points. Now, if you're an institution or trader, I can go and borrow Japanese yen, and for instance, for every dollar I get 145 yen. Okay. Now, since they raised rates, the yen is getting strengthening. So, like, their currency is strengthening. And now those people who have borrowed that money at a buck, 145 yen, are now can only borrow 100 and no, excuse me, they can borrow it. Today you would borrow it at 145 yen. Prior to this rate hike in Japan, you could borrow 160. So basically, this is a version of a margin call. And so when you have that big, 15-point jump in between what you borrowed it at and now what it's worth, you have to cover that. Now, we're talking billions of dollars that have been in this trade. I mean, if not trillions. And this was worked since '07 because of the policy of the Central Bank of Japan. Now it's changed, and now you have this policy change where they've raised rates. Now it's basically a margin call if you've done that trade, and now you have to unwind everything that you used in that borrow, and now you have to bring it, give it back basically to who you borrowed it from. And that is part of this unwinding of leverage, unwinding of risk. It's a major margin call, in my opinion. And I think you've seen a lot of people who have done this trade, and it's mostly institutions, hedge funds, that kind of thing. They've taken that borrowed money and they've taken the profits from it and they bought the Mag 7. And they have been unwinding this thing for a while because they're in trouble. And now with this past weekend, with all these events happening, this thing is starting to accelerate. And I don't think we're anywhere near the end of this at all.
But I think you can see that because this is a global sell-off. This just isn't a regional sell-off or sector sell-off or anything. You're seeing all the sectors of the S&P go down. You're just seeing people starting to panic a little bit. Now, can it be stopped? Maybe the Fed will come out and say they're going to raise rates and that'll slow it down. And then, but I think it's just going to fall back apart again because of all the macro things that we've been talking about for months on this channel.
Mm-hmm. Yeah, I agree. You want to get into some charts and see what we're looking at?
Let's just take a look at just what's happening today and tell me when I'm ready to share here.
Go ahead.
Okay. So we'll start with the S&P. And here's today. Okay, this is a daily chart of the S&P, and you can see we started out, and popped up, and we almost came up to the Bollinger Band. We're underneath the intermediate support level. But as the day went on, we're sliding back down. You can see that, in the Qs, or not in the Qs, in the S&P. You can see that in the, and here's the critical level right here, the 200. If this comes down, I would expect some resistance or some support here. We might have a bounce, but if we keep going, we might see that come back down after we get a bounce. But this is quite a trailing down, and it goes all the way back again. This is to about July 16th, 15th in this area. We started to see the SPY go down. Let's just look at the comparison here. Okay. So this is the Qs right here. Okay. And they hit up here at the top. Well, it looks like 10th, 11th of July. And ever since that down, you can see the same thing with the S&P. right here.
Okay.
And then this is
Russell.
the uh, the Russell. So you can see everything is piling down. This is the Dow, everything. I mean, remember when we saw the Russell go up when everything else was going down? We saw a rotation. We're not seeing that. This is
Right.
the TLT. So this is the bonds. So you can see what's happening is this money's exiting and is coming in to some part into the 30-year bonds and into the bonds because the yields, have gone down.
Mm-hmm.
Uh, do I see any improvement on the S&P? Well, not according to the MACD or even the stochastic at this moment. It's just continually to go down because people are asking, well, when can we get back in? Well, not right now. And if you're using my guidelines of trading, it's definitely not right now. I mean, if we even look at the Qs, look what happened to the Qs. They came down and traded underneath the 200. Right now, they went all the way up above the Bollinger, but right now they're back down. You can see this channel that we're in, and it's barely within the bottom of the channel. So this one's not done yet either. Look at according to the charts. Still, we look at everything down. It's not looking good on the Qs, and then we go to the Dow,
And
and
we
here
got and
again,
we still have 38 minutes in the trading day as of
we
today,
do.
Monday.
Yep, yep. And so the Dow's down over 2.5 points right here, and it's kind of indecisive here. Okay.
Mm-hmm.
If we go look at some of the mega caps, let's look at Nvidia. Nvidia did the same kind of thing. It kind of came down uh, in its channel here, went back up, hit the middle of the channel. Now it's right on the lower Bollinger Band, still outside the Bollinger Band. Again, here's the 200. This is kind of the line in the sand on the bottom here. If we get past that, technically that puts you in a bearish mode on a technical chart. And a lot of computers trade off the 200, and right now it's support. But if it goes under, that'll turn into resistance. So,
Yeah.
just be careful. Let's look at Microsoft. And who would have thought Microsoft would be trading today under the 200-day simple moving average? I mean, Microsoft, I consider a really solid company, but
Yeah.
when we start seeing these sell-offs, you can see that the trend has been bad, ever since probably we're looking at, July, 8th, 9th, 10th again. That's when we
Mm-hmm.
started coming down. Now, if you were swing trading this, we would have got out right about here and saved yourself this entire downward trend in Microsoft.
Wow.
Apple, Warren Buffett just sold out on Apple, and you can see that gap down. It's coming down. Here's the 200 again. It's above it, but it dropped below the 50, and it dropped below the lower Bollinger Band in a big gap. Tried to make it back up. 50 becomes resistance. It used to be support. Blew right through that. And again, here we are underneath. Doesn't look good on the oscillators either. Who else we got, Trent?
Let's see here. Tesla.
Tesla,
That's a
Tesla,
popular one.
Tesla,
Mm-hmm.
Tesla below the 200 today. Okay, just like Microsoft. Here we had it. It was bounced off Friday. It held support at the 50, but today, boom, down under the 200. Tried to come back up and touch it, couldn't get past it. Okay, this is going to be big with Microsoft and Tesla if they close underneath the 200. They could possibly come back up, get above it, or come back up, hit it, and come back down. We'll have to
Mm-hmm.
see. But again, the oscillators aren't looking good on these. So if you're thinking about buying the dip, which I don't recommend on these, and I don't make recommendations, but go look at the charts and say, is this the bottom yet, or is it not? Okay,
Yeah.
learn the charts and understand the charts.
I think it's very important to understand that this has been looks like 10 days or so of downtrend.
One, two,
And
three, four.
it's important to recognize that when you start breaking south and you continuously break south over a period of time, to get that momentum back to go back up takes an enormous amount. And based on what you and I've just talked about in this deleveraging element, that means there's not as much liquidity in the market to actually make that move higher and to break that downward trend. So when you're looking at any stock or any index, if you span out what I think you've got it at a year, Um,
This is at a 3 month, but we could
three
go
month,
look at
um,
a year. There's a year.
you can, that's a massive, what you see since mid-July, that downward trend, that's like trying to catch falling knives. And that's what's happening right now. And so if you're thinking, oh, I'm going to buy the dip, take into account some of these other macro elements that are coming into this and influencing this selling before you decide to buy.
Good advice. Although we don't give advice.
No, we don't give advice.
SMCI,
Same
there's
thing.
super micro. This one closed under the 200 Friday. Okay, let me just extend this. If I can, I'll extend that out a little.
Hmm.
Today, we're under it again. We're falling down the lower Bollinger Band, right
Yeah.
within this channel. Came back up, hit right to the center of the channel. Here's your 9. Here's your 200. Here's your 50 way up here. Okay. Here's your 20 way up here. Again,
Hmm.
oscillators off. Look at this trend again. I mean, this came back to about the middle of September, 14th, 15th down. Okay. Is this a place to buy the dip? What do you think, Trent?
I think it's too risky. The overall
Yeah.
trend is negative.
I mean, yeah, all your oscillators are telling you this isn't time yet. Okay. So if you're going to do things and buy in and try to catch it, at least use some technical analysis to give you a halfway good chance of a probability of maybe, having a good entry point.
Right. Exactly. And I think that's where I mean, what I'm looking for. I'm looking for these big pivots. The what is taken today to be to hold back is a lot of patience. That's for sure. And I think
Yeah.
that's something you have to be aware of, that it's okay to walk away from all this.
Yep.
So.
Here's the XLK, the technology ETF. Okay.
Hmm.
Came down under the 200 today. All of technology now under 200. Okay. Bearish. If this closes down here, look where it hit, right on the intermediate support level. We'll
Yeah.
see. Oscillators look bad. Let's just go through a few of these. That's the XLK.
Okay.
XLC is the communication. This is where Meta is.
Yeah.
Okay, this was up above everything. The 9 today, boom, right down to the intermediate uh, support level again. Here we go. Oscillators crossing. Okay, that's the communication sector. Let's look at XLP. This is consumer staples. Okay, this was doing well,
It was.
last week, and then a tide going out lowers all boats, and this is what we're seeing. It just came down to the 50 though. Okay, so again, it's been using this 50 quite a bit, for support. We'll see. That's a big candlestick. We'll see if it goes down, but again, crossover on the MACD, crossover on the stochastic. That doesn't give us much hope, does it?
No, I
Would
think
I
it,
want to? Would I want to put my money in there today? No, not according to this chart.
well, I think it also shows how broad this sell-off is right now.
Right.
This is consumer staples. This is necessity items.
Yep.
And so
Energy.
energy, same thing.
Look at this, below the 200.
Yeah.
Okay. I mean, this is not good in any way to have your ETFs and your sector ETFs starting to trade below the 200. Okay.
No.
Yeah. I mean, a lot of long-term investors would probably use that if you were Paul Tudor Jones and say, I'm out of this one.
Yeah.
And that's what he did back in the great financial crisis. So there's XLE. It's financials. XLF. Not quite below or down to the intermediate support level, but that's quite a drop 3 days in a row with
Yeah.
lots of gaps. And look at this. Boom, boom, boom. Again, we'll see if that support level holds. We'll know a lot more tomorrow. XLV, XLV. You would think that healthcare might be a place to go hide. Well, no, it was doing really well last week. Got up to my green line and the green line of death, which is the intermediate resistance level, dropped down, and now it's finding some support on the 50. These lines mean something, and that's what can help you become, a better investor or trader just by knowing, that you're going to have a better probability knowing these things, when to possibly get in or when to possibly to get out, so that
Hmm.
you can avoid some of what we're seeing today in your portfolios.
Yeah.
Industrials.
Absolutely.
There's industrials. Wow. Look at
Big
that.
jump, big drop.
Thursday, Friday, today. We're below the Bollinger Band now. Again, Look at all the oscillators just sinking. Okay. Will we hold here at the Bollinger Band? Well, you would think, but the Bollinger Band's starting to turn down. You know, would you
Yeah.
buy at this point? Maybe someone who trades off Bollinger Bands would. Okay. It's based on what your personal trading preference is, but have a trading plan or have an investment plan and follow it, and make it your own.
Hmm.
Don't just go and watch Jim Lebenthal or Josh Brown, and Josh Brown's buying because you buy. It's just make up your own mind, take control of your own destiny, and give yourself a fighting chance.
Exactly. I think, and it's having that game plan, um, that investment, basically investment policy statement. How do
Yep.
you run your investments? What are the rules you follow by?
Yep. Now here's
Yeah.
utilities. Utilities is usually a good place to go hide, during these times, even though we're seeing a drop of 2.5% basically. It's
Yeah.
still above the 9, still above the 20, still above the 50. We haven't seen a crossover yet on the MACD. We have one on the slow stochastic, which is kind of an indicator that we might be seeing that on the MACD. So
Hmm.
again, it's not, this has been the best of the worst so far, that we've looked at.
Right. Yeah.
Um, Go ahead. Materials. Look at that.
Good
That's
Lord.
materials. I'll just go through these real fast now.
Yeah.
Real estate. Real
XLRE. Yeah.
estate. Real estate came up. Look at that. Hit the green line of death
Yeah.
twice. Hit it again today on a wick. And now we're trading under the 9. Okay. We're seeing a crossover in the MACD. You know, would I get into this today? Not knowing what the market conditions are right now. Why risk your capital? You know,
Yeah.
when you can go look at these charts and say, okay, it gives me an answer. I can take the emotion out of it.
Yeah.
And
I, I
then
I think it's important to look at all your sectors right now. They're all selling,
this
you
is
know?
semiconductor. Semiconductor went underneath the 200. We'll see. And it's following the Bollinger Band right down. Okay.
Yeah.
We'll see what happens. But again, look at the oscillators. Done, done, done. So um, nothing that I see, that I like all that much. You
Look at
know, there, Go
look
ahead.
at AMD.
Andy.
This was positive earlier today. Now, I was looking at this chart today and I thought, oh, on my whole, like all of the stocks of the bus portfolio series, this is one and another one was positive. So I went to the chart and looked at it and I was like, oh, well,
Yeah,
you've got
exactly.
that 9-day simple moving average there in green, and
Right
it
here.
comes up to it and then it stops.
Yeah,
But
it's
that trend is continuously going down right now.
yeah, yeah,
So is that you know, is the AMD the place to go? I look at the long-term trend, and my answer is that's against my policy.
yeah.
It's too risky.
What you want to see is this coming down. You want to see the 9 come down and start getting the price action above the 9 and kind of a little hockey stick that it starts going back this way.
Yeah,
And then you go to the oscillators, and if you see the MACD's turned and crossed over the signal line, then you have a more confidence that okay, momentum has and trend has switched a little bit.
yeah,
Right now, right now we don't see it. I mean, the RSI, which is the momentum indicator, is at 34. Okay, not good momentum.
right.
So
Yeah, I
even
think,
on
and
something that looks good, is it good? Now you might get some day traders that go in there and try to hit the bottom here and then catch it back up. But on a swing trading chart on a daily, we wouldn't
mhm.
do that.
Well, and I think that's something to consider is, I expected this morning a massive gap down in a lot of these companies and people, and then the retracement up, the move back up. And the concern is as you get into the last, 25 minutes of this day, or think about this, how many big institutional hedge funds are blowing up right now,
Yeah,
like crumbling, coming into something like this when everything has been selling all day long and trying to buy a dip. This could be dangerous because you get in after market, and if somebody comes out and says we're folding up shop, and it's a multi-billion-dollar hedge fund, that takes down a lot of banks. That puts a
yeah,
lot of pressure on banks. And that
yeah,
would be another reason why the Fed would come out and do an emergency meeting to lower rates, because We saw this in what long-term capital management when back in 98, 99,
Yeah,
when they started falling apart, the New York Fed had to come in and bail them out, and it affected like 7 banks.
yeah.
And it was insane how much leverage they were up. So trying to catch this falling knife is just really not it's not advisable.
No, this is AEHR test systems, and this is one that a lot of people in the channel follow. But this, I wanted to show you the power of the resistance of the 200. If you get under the 200 on a daily, I mean, you
Hmm.
can see it came up, popped up, right on it, a little bit above, right on it, below it, below it, below it, tap, 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 down. Okay, it's just hard to get by that sometimes,
Yeah.
unless something really comes on unknown market condition, like someone's going to buy them, or they got great earnings, or a new product came out we didn't know about. It's hard to get past that. So that's why I say when you see Microsoft, Tesla, these guys get under it. If they can't get back over, it's going to become a bigger resistance level, and then all the machines that we're trading against, and 90% of the trading, they're all going to adjust, and that's going to become resistance,
Yep.
and it's just going to be harder. So just be aware of that.
Check out TLT and IEF.
TLT, this one for this is amazing because this is a 30-year bond ETF, and look at the gaps in there. I
Uh-huh.
mean, again, you've come up and you've hit my green line of death, and then came up and you touched where the sell orders are, and we've come back down towards the green line of death. This is
Hmm.
tough to get over too. We will see, but if markets continue, in the sell-off mode, this green line of death is going to be moving up. You know,
Yep.
it'll
Yeah.
adjust it on the program, but look at that. I mean, boom, boom, boom for a you know
Yeah.
30-year boring bonds.
Well,
Okay,
and the thing of the temptation here is people would say, "Oh, I'm going to run to the bond to TLT right now." And the risk is you're past what the intermediate trend resistance. You're now at that blue line there, and you're starting to see the exit out of TLT because everybody who understood how bonds work was getting back in it right around what is that, the 1, 2, 3, 4, 5, 6 days ago. They've seen what's happening. They got in it, they made a bunch of money. Now their chances are this will close lower than where it opened up. The temptation is I'm going to run to bonds today, and here you go. The risk is you have the yield recover and run back up and do a dead cat bounce, and you get caught up in TLT going negative because yields go
yep.
up, bond values go down, and vice versa.
Yep. And I would watch this green line of death. And the other thing I would see is the crossover of the stochastic here. Okay.
Yep.
It's not much, but it's something. Okay. And in these markets, you just got to play them tighter than you would in an uptrending market.
Yeah.
What else did you want to look at? You said,
IEF, which is a
yeah.
shorter term bond fund.
Okay. This is a
Same thing.
10-year treasury bond fund. Yeah. Look at that. Went right up. Boom.
Boom. And then you have HYG, which is high yield bonds, or also referred to as junk bonds.
Yep.
And as a friend of mine said, you're going to see a lot of unraveling of high yield bond trades because one, it pays a better yield than, say, investment grade, but also it's higher risk. And so over the last, 3 days, you've seen exited out of this high yield bond trade, and they're moving towards the TLT. Now the question is, will you see a rotation back to risk for a very short period of time? And maybe the red line's to 200. Maybe that is where support is in high yield bonds.
I
But
find it interesting. That's where it opened today, right on the 200. Okay, so
yeah,
that tells me that all these machines, that's where they had it. That's going to be the line in the sand on the bottom. And look
yeah,
what it did. It popped right back up above the intermediate support line.
yeah. And chances are you'll see this rotation from high grade bonds like IEF and TLT back into HYG for a short term trade and bring the 10-year and 30-year US Treasury yields up and bring high yield bond yields down. And then you'll see this rotation again because nothing's fixed. Nothing's fixed just because of a massive, 3 days of selling. But this is how these guys are trading these
Yep.
these bonds.
Look at
Berkshire.
Berkshire. Berkshire, man, it took a dump off the 9. This was Friday,
Yeah.
right off the 20, used the 20 as support. Now it came down, came up. Now we're seeing the resistance at the 50 and the Bollinger Band, the lower Bollinger Band. And all the oscillators look bad. This is on Berkshire. Okay. And they came out with a really good earnings report, it looked like on Saturday.
Mm-hmm.
Okay. So
Yeah.
again, here's where we'd swing in right here, up. Here's where we get out. There's your profit right there.
Yeah.
So why would I want to stay in if I'm using this as a swing trade and not an investment when that would tell me to get out and now we're here. Okay. Basically almost where we started, you know.
Yeah. And you know what's fun about this, Marcus? And I know so a lot of what we talk about is doomsday, or it just we've been through a number of these. You've been through more than I have, but I've been through three major ones. The dot-com, the housing pandemic. And what you don't want is to lose money. But the fun part is when you start to understand the behavior of markets and you start to bring connecting the dots and you start to bring this together, you understand it, and it actually creates in a weird way of comfort, confidence, so that when you do go back, you start to look at your portfolio and you start to look at these companies, you see it in a whole another light, and you become better at this. It just takes time and practice and
Well,
paying
and then have a
attention.
trade, have a plan to take your emotions out. Like my plan says to get out before weekends. I got
Yeah,
out with what I had left and did pretty good last week in a bad week. I mean, we were up, and then I get up and I look at the futures this morning. I'm like, oh, I'm going to have some coffee. I don't feel bad. I didn't just lose,
right.
10%. Okay,
Yeah,
across the board because I'm not in it. Okay. In fact, I'm making 5.4% over in treasuries right now,
yeah.
which
And
tomorrow, Tuesday, will pay me, and I'll have some money on the side whether to put them back in or if I'm going to buy anything, which I probably won't from what we're seeing right now.
yeah, I think until we see a change in trend from an intermediate term at least, um, this is a dangerous environment. So a lot
I'm
of
really,
things going on.
I'm really watching that 200, and if these major, I mean, we already got two of the Max 7 below the 200 now.
Yeah.
Uh, One surprises me because it's Microsoft.
Hmm.
Tesla doesn't quite surprise me as much, but we got that trend down. We'll see if they bounce off or they move right through. And these a lot of bad news comes out after market closes, as we're finding out. And
Hmm.
then there's geopolitical things that we can't control. And right now we've got Iran's out there rattling the saber, saying
Yeah.
we're going to attack Israel, and that hasn't happened yet. But I don't know if it's going to be like the little fake attack like they did last time, where they sent little balloons with firecrackers over and they shot them all down,
Right.
and it took them 5 hours to get there, you know, or if
Yeah.
it's going to be an actual, we're going to launch a missile, this time and make a point.
Yeah.
Uh,
Yeah.
but this thing could escalate, and that could cause havoc in the markets also.
It's also, it's also financial warfare, stupidity on the parts of institutional managers, over leveraging, taking too much risk, getting locked in. When you have customers who are banging on your door for returns, it gets real. You do some really crazy things, and I think we're starting to see the beginnings of that. So, as I was thinking this weekend when I saw the Berkshire Hathaway thing and the Nvidia thing, Nvidia having to postpone delivery, I
Yep.
was just like, these are things you and I, well, we just don't know it's going to happen. And so when things are wonderful and extraordinary and it gets just really lofty, you got to just take a minute and check yourself, to make sure that you're doing the right thing, you're protecting your wealth, you're protecting your family. So,
Yep.
well,
And
Mark, you got any? Go ahead.
only you look out for your own money. They don't look out. Your financial advisor right now, what's he doing? Is he worried about your money? I
He's on the
mean, is he
golf
saying,
course.
well, he might be, or he might be taking himself out of the market and
Right.
moving it over to treasuries. I don't know. There's good financial advisors out there, but a lot of them just, set it and, let it sit there forever and be in the market.
Yeah.
And
It'll be
if you,
okay. It's going to recover.
yeah, but it probably will over time. Markets do recover, but it could take 13 years, like one of our members said just a couple of days ago. It took him 13 years to get back to zero.
Yeah.
The last time he rode through one of these.
Yeah. And that's the thing is, if you got to look at your time frame. I use the what keeps me up at night. When you wake up at 2, 3 in the morning, you can't go to bed because you're so worried about your investment portfolio. It shouldn't be that way. Your gut is telling you there is a problem here. Step to the side and take a break. Analyze the situation, figure out if this is the right strategy for you, and then build upon it, build your process. So that's not advice or recommendation. It's just
Common sense.
common sense.
Take care of yourself, you know.
That's right. Yep. Well, Mark,
That's well,
what else you got?
I don't
Anything?
know. Hopefully next time I won't have a dumpster fire behind me. Maybe I'll have sunflowers and bright shining mountains
I'm
instead.
trying to be optimistic. I'm
Well,
trying to be trying to be an optimistic guy. There's opportunity in
yeah,
this.
you can lead the optimist club, and I'll lead the pessimist club today. So
Okay. Yeah,
point counterpoint. Yeah.
that's right. Well, I do.
Trent, you ignorant slut.
Yeah, right. What was that?
That
Gilda
was
Radner and Dan
Saturday Night
Aykroyd.
Live with Dan Aykroyd. Yep.
Yeah, most people probably won't get this, but that was classic.
Yeah.
All right, Mark. Well, thank you again. Chances are you'll see a Wednesday video from us as well. Hopefully, we'll have a better understanding of what's happening.
Yep.
Hopefully, we'll see some sort of relief, but yeah, I don't know. Maybe not.
Yep.
You
Well,
know,
remember, this is more global, so things that happen overseas overnight can affect
yeah.
what we do in the morning. So,
Well, think about last night.
yeah.
8 o'clock last night, the Nikkei index, which is Japan's basically S&P index, was down 8% at around 8 o'clock. That's major. So
Well, then
be careful.
I think it closed down 12 then, didn't it?
Oh God.
Yeah,
Yeah.
yesterday. Yesterday it
Geez.
closed down 12. Yeah.
And that's a big index. That's a
Yeah.
major index. All right. Well, we'll see you probably. We'll have another video out on Wednesday, which is our regular time at 3 o'clock Central. But in the meantime, manage your investments, protect yourself, and always, always live loud. Peace.
And cut. Okay.